Welcome to Trading Lounge and the Commodities report for metals and oil, and starting with US spot gold. As you know, we've been counting 5 waves down this sequence here, this leg here for wave C of B, which essentially is just a part of a larger corrective rally as an A wave, a B wave here, and then a C wave up through here. And we'll be looking for 5 waves up through to here, making new highs here somewhere, 1250, sorry, and yeah, so just drilling in here in terms of the intraday move here. We are seeing impulse waves here, so we are seeing a trend. We're not seeing overlapping wave structures just yet. Of course, 190 will deliver 90 will deliver a corrective pattern, but essentially we should be continuing to move up. The thing that I'm a little bit unsure of is this. I'm just wondering if this is wave 1 and 2 here, 3, 4 and 5 here, and then we get the A, the B and the C wave here. I'm not quite sure about that, but the 61.8 would be 75 maybe. Let me just check from this point here, because you have to leave your stop out of the way. 78, right? So 78, 78. It'd be good to keep the stop below that. I think the good thing, I think the thing here to do is that if 190 becomes the support, then trade long from that point. If it does move back into this area through here and trades below the 180 here, that would be really nice, because then we could get support when it came back on here, get a reference point first, and then trade up from here and adding on 85 and adding on 90 and so forth. And the real safety mark for all of this, of course, is being on 1200. So anything under the 1200 is essentially at risk. So it's not a place to overtrade. But if you undertrade, then you can build up some small positions until we get on top of 1200 and get over the 61.8 retracement level, which would roughly be at the 1200, just below the 1200. So the market can move to 1200 and fail. If the market moves to 1200, it's going to react at 1200 anyway, and be retesting this 1190 here as well. So it's going to be a little bit choppy to the upside. The silver market, much the same thing, same but different. It didn't make a new low here. So we've been looking at this as an impulse wave to the upside and an ABC correction back, and then 1 and 2 and 3 and 4. So it's basically building. So what it's done now, and in its own little ways, it's created a reference point. So that through there would be the catalyst and trigger signal, whatever, for the upside there. But this is a medium level here, 1650. It carries a lot of weight. Not that you think of it would. You'd think $17 would, but it is the 1650. But the $17 and the 1730 gives you places to add to positions. So because we'd be looking for a move above the 18 if everything went according to plan. Well, at least let's say to 18 for this move. So first of all, a nice tested support on 1650, and then look to set up from that point. The base metal markets is in favour for the gold move as well. It's good that they're moving together. Well, we want them to move together. It just gives us another layer of confidence. And from this point here, we're looking, I don't fully understand this structure. I understand bits of it, and it's got us through, and we've been on the right side of it and so forth. But the move up through here is quite easy to read in terms of structure, and we're looking at an impulse wave, and we're looking at 5 waves. Now it could go further than this, but it will react at 300 here. So the stocks that we're trading to the upside, OZL, for instance, it's correcting at 480 at the moment. I thought about taking profit there, but because copper's got more legs to the upside there, we're looking at $5 for that. But this does represent the move for BHP, I must say. So we're taking 50% profit on BHP at $34, and we'll take the rest there because it's got the pattern that we're looking to the upside is very similar to copper here, and we've got 5 waves up here for wave 1 and 2 here. This is all the 3rd wave here, so we're in the 4th wave at the moment. It can pull back to the 4th wave of 1 lesser degree here, so around the 287, 286 area here, and then another move up through to here. So in terms of time, would be roughly looking at the same as wave 1 here as well. So we've got a few more days on this, but once we reach that point there, we're going to have to be very tighten up the stops for the materials sector per se, because it can fail from that level, because the move up to that point, and this is BHP as well, the move up through here so far, yes, it can be counted as an impulse wave, but also can be counted as a corrective wave, the way that I have it now. So as an impulse wave and a big bullish market, that would be 1 and 2 here, 3 here, 4 here, and 5 here. Very dodgy, overlapping wave structures. But even so, once we get here, if we get an A and a B and a C pulling back, the standard sort of thing of this area, say 270 in here, this move into here. If this move here is corrective, then I know that we've got a bull market. We're moving up here. But if this gives us a clean 5 waves down to this point here, then we've got, it's over at that point. And this is the same for the materials sector. So we won't know. What we do know is that trading to this point here is sweet. We need to chill on this one here until we can work out we've got 3 or we got 5 here. And that's just what we have to do. We'll go find, we'll find something else to do. The platinum market's on the same sort of thing as well. We are short on this. We'll probably get taken out because the run for this here is also corrective as well, because coming back here again, we've got this move here which is in 3 waves. This one's in 3 waves. Yes, we could be getting a triangle across here as an A and a B and a C. I'll just better draw that out. Well, currently we're looking at as an A and a B and 5 waves up for C into this area and then failing from that point. But as a triangle, it can be 5 waves, and you know what a triangle is? It's 5 larger waves, each with 3 waves in each. So it can go to here, and then it can have an A and a B and a C back for here. So an A, B, C, D, and alternative E over here in 3 waves, and then down from that point there. So not a great difference, but a subtle thing. So we won't know until we get, until it really matures into this point here, and not that it matters that much. So even as a long or short trade at this stage in this market, it's probably not the one to really go for. The oil market, now, when I normally see these sorts of things, I always look to the closest largest number, and to me that's 65. It's a medium level. It's halfway between 50 and 80, 2 major trading levels, and it normally kicks in quite nicely, especially if a market's approaching it and it's tired, and this is a tired rally here. So the targets we had up here were 63 and 68, so it can end up anywhere up here to be, to be honest about it, but we have tracked a 5-wave sequence to this high here, so that can be the high as well. So we need to move through this, we need to move beyond this current price action to give us a bit of a clue of if we're going to be moving higher, and then we can work the count into that. But it can fail from there. This is where we were looking at as a target. If you wanted to stay long in this, well then of course you use the weekly robo, and you'd still be long. The stop would be down here somewhere for the weekly robo, and that might keep you long to the upside there, and which is not such a bad idea. the intraday for all of this is the count up here has been, you know, it hasn't been a great count, but 1 and 2 and 3 and 4, and then 1, 2, 3, 4, 5. See, realistically, this wave here, this fifth wave here, has got the extension in it, and I'd kind of assume that would be into wave 3 there. So we could get a larger correction across the 60 and then to the upside. We'll know shortly, but as it stands, and as you know, our main point was we understood this was wave 4, and we were looking for 5 waves to the upside there. 1, 2, 3, 4, 5, and that's what we've got. So 1, 2, 3, 4, 5 here, and it does seem like I've got an impulse wave here, corrective wave here, but it could be an A wave, a B wave, and a C wave down here. If the 58 becomes the retested resistance, then we know that we're sort of on our way down, or at least looking at a larger correction. Would need to be moving further down to confirm the bear market on this side of it. But as it stands, we've achieved what we wanted to achieve with this, and we just need to wait and see what we're actually going to get next, and it can move up or down just as easily in either direction here. So let's get beyond this current price action here. Alrighty, short and sweet. Cheers.